Hello. All right, we're going to talk about the jobs report. Yeah, this just came out a couple of days ago, actually, and I've been wanting to get to it. This is the Bureau of Labor Statistics jobs report for December 2025. So this kind of sets the tone for next year as far as the economy and things of that nature. I'll say if you keep an eye on the stock market, you would see like a couple of days ago, the stock market kind of crashed. This normally happens if the jobs report is unfavorable. If things don't look good on the jobs report, you'll see a dip in the stock market. It kind of recovered a little bit for the past day and a half, but not quite where it used to be. So that summarizes the job report and what the investors or what people think or took away from that. So the headline figures from the Bureau of Labor Statistics: non-farm payrolls rose by 64,000 jobs in November. This reflects minimal net change in employment since the spring, and that's for the from the Bureau of Labor Statistics. So unemployment rate did increase by 4.6%, the highest since late 2021. And we have to remember we were going through a lot of these unemployments from what we see are like the federal jobs. On the private sector, the jobs kind of picked up a little bit, but on the federal sector, we know Doge was kind of laying off a lot of people. And then we also had that government shutdown, which didn't help things. So unemployment rate did increase by 4.6%, the highest since late 2021. That's according to the Bureau of Labor Statistics. The number of unemployed persons was about 7.8 million, also higher year over year, according to the Bureau of Labor Statistics. So all in all, it's not looking too good. Then also the number of unemployed persons, we talked about that. Then data collection was delayed and distorted by a 43-day federal government shutdown, so which also prevented publication of you know, the regular Bureau of Labor Statistics report in October. So there is some, take this with a grain of salt. It's not the most accurate just based on the government shutdown and the things that affected collection of all the stats, because this was one of the departments that was shut down during that time. So industry and component highlights, we see healthcare and construction added jobs. You know, with all the immigration thing going on, you would think construction jobs would decrease, but they actually increased actually, which the healthcare sector also added a lot of jobs. Federal government continued to decline, but remember that there was a buyout that was issued, and a lot of people were taking those buyouts to kind of get away from the federal government. I'm local here in the DMV, DC, Maryland, and Virginia. So we feel this 100%. You know, some people that are selling their properties will tell me they're moving down south. They're going to accept a buyout. Some of them are trying to move closer because they were mandated to go back to the offices. Just a few things. The market kind of slowed down for a little bit. I see a lot of expired listings in the DC area, just because one, it's the holiday season, but secondly, there are a lot of there's a lot of uncertainty with the federal job market and continued decline and all the layoffs, government shutdown. So that affects this area a lot. Um, some houses are still selling. The market hasn't crashed completely due to lack of inventory, but we'll get into what all these numbers mean. Other major sectors, you're talking about manufacturing, retail, information, finance, showed a little change, slight, uh, change there, nothing major. Average hourly earning edged up slightly, 0.1%, and annual wage growth around 3.5%. So average hourly wage. So that, for instance, in this area, you got a lot of counties that increased the minimum wage mandate. That could play into that, but overall, I guess it's a good thing when people are making more money. We just need to see if that will translate into the economy as a whole. The average work week was modestly higher, so going into the holiday season, I guess people picked up a little bit more overtime, or average work week moved up slightly as well. Demographic and labor force trends. You say teen unemployment remains high. It's about 16.3%, much above overall average. So a lot fewer Gen Z or Gen X people are going to work. You know, don't know if that's by choice or there are just fewer jobs for them. Black unemployment elevated, negative 8.3%, notably driven by teen joblessness. So it's saying that teen joblessness affects the Black community a little bit more. Labor force participation, negative 62.5%, and employment population ratio. The employment population ratio is about 59.6. Just a little change there. Context and short-term trends. So we're just going to put this in the context. October 2025 saw a large unemployment drop by about 105,000 jobs, primarily due to federal job losses, which skews the recent data trends. So one thing we have to keep in mind, as I mentioned earlier, these numbers are a little bit skewed based on the fact that the Department of Labor Statistics, the Bureau of Labor Statistics, had a shutdown for about 43 days. They had that delay. So hiring has slowed down overall. Recent monthly gains averaged below earlier 2025 levels. This is according to the Associated Press. Labor market indicators, weekly unemployment claims dropped modestly. So negative 13,000. It dropped by that, but remains elevated relatively to prior to the economic cycles. Once again, that's the Associated Press. Continuing claims ongoing unemployment rose. More people remain out of work. This is according to Reuters. Um, and just the takeaway, market takeaway. Report shows a labor market that is weakening / cooling, no robust expansion. Um, as mentioned, some economists caution that delays and reporting gaps means data has uncertainty and should be taken with caution or grain of salt, as mentioned. There are gaps in the reporting. So we can't see this and say it's the end all be all, right? Um, you see broad private payroll surveys found private employers shed jobs in November, suggesting hiring softness outside government data. So, they're just saying that private employers let go of a lot of people. Key underlying theme is one, the government shutdown disrupts or complicate the trends or analytics, and makes it not as accurate as you may want it to be. Federal labor cuts have highly influenced the headline figures. So that was created, those job cuts. Sometimes this may be good, it may be bad, depending on your point of view. Only time will tell. Sometimes they say you got to trim the fat in order for things to be lean and effective, but sometimes that can also translate into other areas, being affected, families losing jobs, or much needed programs being taken out. So we never know how this would play out. And that is not our job to forecast what's going to happen. We're just here to report on what's happening. And we're just going to say how this potentially might affect the housing market. Younger and minority workers are facing notably higher unemployment rates. Wage growth has slowed. The job creation remains weak by historical standards. So, key takeaways here as far as how does this pertain to the housing market going into 2026. We are expecting a slow economy. It's just fewer jobs. Maybe it might. Sometimes they say you got to step back in order to step forward. We'll see if that's what this translates to. But as of right now, it's not looking good for the economy. As I mentioned earlier, if you keep an eye on the stock market, as soon as this report came out, the stock market kind of dipped for a little bit, right? So that's the 2025 jobs report of December 16th. Not the most accurate, as mentioned, due to the fact that the government was shut down for about 43 days. So there's a delay in reporting. There are gaps in this report. So the government can look at this and say, don't take this dip, or don't take it too seriously because the numbers are not accurate. So that's one way to look at it. However, others may say this just speaks to the trend in the economy as a whole, which has been looking bad. So it depends on where you are with it. But what I can say regarding the housing market, things have picked up, at least personally. Earlier in the start of the year, things were very slow. Throughout the year, honestly, the year is already over. We got 2 more weeks. So as a real estate agent, whatever business you've already done. All you can do is look back at the year and see what you can do better next year. Um, Overall, fewer sales than last year on my half, and that's not only me. You could just get that sense from a lot of agents, and also I'll give you an example. When I registered for the brokers class, it was so hard to find schools that were offering the brokers class, right? For agents. And I spoke to a lot of schools. They're like, we're not offering the class, not enough people registered. Not too many agents didn't do well financially this year to go pay thousands of dollars to take a class. I was like, oh, wow. I looked almost all over the state of Maryland, and I found just one which was actually offered by the real estate commission. So that just spoke to the economy as a whole, right? And how it slowed down for a bunch of agents. But let's say the last 3 months, kind of picked up a little bit, and you're like, okay, where's this coming from? Um, because earlier I do a lot of different sources for leads, right? Um, but I wasn't getting buyers to look into houses, or you would just have a house on the market for longer than usual. But later, out of nowhere, a lot of buyers are just coming out. Hey, I'm ready to purchase, and so that on a personal note says something has shifted. Maybe these people just had saved enough. We'll see if this continues, but personally, more people are looking, right? I'll say this much. I do look into expireds, which are properties that were on the market. One thing I noticed, especially in Washington, D.C., houses, the number of expired listings just increased all over the place, Maryland, and D.C., and Virginia. So that indicates to a market that's slowing down. And it's not as favorable to sellers as it once was, because a few months back or years back, you put your house, especially during the pandemic time frame, put your house on the market and you'll get a bunch of people fighting over it, overpaying for a house, things just moving. But now, whenever we, I don't think I've had a single offer rejected out of the last three or so offers I wrote. All of us went a little under, except for one where the buyer really liked the house. It was very close to where they wanted to be and for their kids' school. And then the seller already had another offer. So I just said, you know what? If you really like this place, let's just give them what they're asking for. That's the only one we went at asking price. And then when we got the inspection report back, we were able to use some of that, some of the deficiencies that were cited on the inspection report to knock down the price. But every other offer, we even went $10,000 lower on one of them, and the other one five. We did do another 10 grand lower than asking, and then we met somewhere in the middle at 5,000. All I'm saying is, submitting offers now. The buyers have the upper hand. Let's put it like that. It's leaning more and more towards a buyer's market. So as a real estate agent, you can kind of tell your buyers to not always offer asking, but each property depends. You know how it goes. If it's in a hot market, hot neighborhood, and you always want to probe to see how many offers they have. If they have any offers on hand, then you may not want to play around if you really like the property. But if they don't have that many offers on hand and you really like it, but don't want to, break the bank, you can go a few $1,000s lower. Well, that's the summary of the jobs report that came out a couple of days ago. And in essence, the federal job market has decreased a lot. Obviously, that is it's a created thing, right? The government was looking to do that. When Donald Trump took over, he set out to cut a lot of jobs in the federal market. The Doge department was created to trim the fat, right? So that we're now starting to see those numbers. The healthcare sector did pick up a little bit. Hospitality is down. We all see the videos about Vegas, and a lot of the hospitality industries losing a lot of business. Tourism is down, which helps with the hospitality, and that goes to the just some of the immigration policies, whether good or bad. We'll see how that translates in the long run. But hospitality is down, but The healthcare sector is up, and there's also another sector that was looking good, construction. Yeah, the construction jobs are up, which is good because that's something that has plagued the real estate market. Just slow construction on not enough inventory. So if construction jobs are up, that means that things are trending in a good way. Hopefully, they are building a lot of residential to kind of offset the shortage in properties. Well, we're going to keep this one brief. We had a few technical difficulties before we went live today, but we just wanted to touch on the jobs report. Hopefully, this answered some questions. If you have any questions or inquiries about real estate in the DMV area, feel free to leave a comment down below. All my information is in the description. Have a good day.